Our next learning objective is to prepare a flexible budget report with more than one cost driver. This is somewhat of a throwback to our activity-based costing when we used more than one cost driver to allocate manufacturing overhead to our product or products. In our simplest form, we broke cost down into two components, a fixed and a variable component, and we used a cost equation y equals a plus bx, where a was our fixed component and b was the variable component of our cost. However, it might be that in our organization we might need more than one cost driver to explain the costs in our organization. In this case, our cost formulas can be adjusted and use multiple cost drivers to prepare our flexible budgets. We would use a cost driver in the form of y equals a plus b1 times x1 plus b2 times x2, where a again is our fixed component and b1 is a variable component and b2 is also a second variable cost component. In Larry's lawn service, in looking at our flexible budget performance report, we identified a fairly large spending variance for wages and salaries. It was a $2,000 unfavorable variance. And because of this large unfavorable wage and salary spending variance, Larry has decided to add an additional cost driver for wages and salaries. He's identified that the variance is due primarily to the number of hours required for additional edging and trimming. So Larry estimates the additional hours and builds those hours into both his revenue and expense budget formulas. Let's look at Larry's new flexible budget. From a revenue perspective, Larry still expects to charge $75 per lawn, but he'll also expects to earn $30 per hour spent on edging and trimming. For wages and salaries, he's again budgeted a fixed component of $5,000, a variable component of $30 per lawn, plus $25 per hours spent edging and trimming. Hopefully, by using multiple cost drivers, Larry will have a more accurate budget. Let's go ahead now and look at an example and build a flexible budget using more than one cost driver. Alaska Tours has identified two cost drivers, the number of cruises and the number of passengers that it uses in its budgeting performance reports. Data concerning the company's cost formulas appear below. The company's planning budget for July is based on 24 cruises, 1,400 passengers at $25 per passenger. Prepare the company's planning budget for July. So our budgeted cruises was 24 cruises and 1,400 budgeted passengers. Our budgeted revenues then will be $25 per passenger times 1,400 passengers for a total of $35,000. In terms of our expenses, our vessel operating expenses have two components, a fixed component and a variable component. The fixed component is $5,200 per month, and then we have two variable components, a cost of $480 per cruise, so 480 times 24 cruises, plus a cost of $2 per passenger, so 2 times 1,400 passengers. This gives us total estimated vessel operating costs of $19,520. Our advertising cost has only a fixed component, and we're told that's $1,700 per month. Our administrative cost has a fixed component and two variable components. The fixed component is $4,300, and our first variable component is $24 per cruise, and we have a variable component of $1 per passenger. So our total cost will be $4,300 plus $24 per cruise times 24 cruises plus $1 per 1,400 passengers for total administrative costs of $6,276. Our insurance expense is only fixed at $2,900. So our total expenses will be budgeted at $30,396, which gives us budgeted net operating income of $4,604. That's our revenues minus our expenses.